From FXEmpire, this is Chris taking a look at the euro for the upcoming year 2024. So I think there are a couple of things that we need to pay close attention to with the euro and the US dollar in general, because quite frankly, I think this is a situation where we're going to have a tale of two markets, just like we did in 2023. So to kind of recap 2023, I think you've got to look at the market through the prism of will the Fed cut rates? Will the Fed cut rates? No, they won't. No, they won't. Oh, they'll tighten monetary policy even further. Will the Fed cut rates? Will they cut rates? And then like right here is about when the dot plot got moved. And then all of a sudden traders are celebrating. And that does make a certain amount of sense, considering that interest rate differential drives currency markets. But now we have to ask a question in 2024 that I think is going to be crucial in determining how we behave. That question will revolve around, why is the Federal Reserve cutting rates? Are they cutting rates because they've beaten inflation and everybody's celebrating? In that environment, the euro goes much higher. However, there are some signs just under the surface that a lot of the trading public seems to be willing to ignore at the moment. And that would be the rise in credit card defaults in the United States, the rise in buy now, pay later, layaway, except for generally layaway used to be if you had $100 purchase, you put a certain amount down, and then like every week you would come in and you would pay it off until you gave them $100. There might be a small fee, but nothing major. Well, buy now, pay later is high interest rates. A lot of times you're talking like 33%. It's ridiculous. That is not a sign of a good consumer. So scenario one is going to be that the Fed has beaten inflation and we're going to party and we're going to go straight up in the air. We'll probably get to 115. We might even go higher than that. We'll just have to wait and see. But what if the Federal Reserve sees something out there and they're cutting rates for a reason? And what if the dot plot that had showed cuts in 24 gets accelerated? Well, that's a sign of panic. And in a sign of panic, you will see this happen. You'll see a rise and then a fall. And that's because people will be running into treasuries. Yes, it might pay less in interest, but they don't care. They want a return of capital. They're not as worried about a return on capital. So I suspect that 2024 is going to be a repeat of what we've just seen. So ultimately, I anticipate that we find ourselves in some type of range. Let me go ahead and draw it here. Some type of range. I'm going to call 115 the high. Like I don't know that we go much higher than that, but I suspect we're going to at least try to take out 112.5. And that may happen pretty early in the first couple of months. And then sometime in the middle of the year, I think we're going to roll right back over. Could be wrong. If we take out 115, then we go back to the 123 level. I'm not looking for that, but if the Fed has beaten inflation and everything continues to be hunky-dory, then that will be the case. I anticipate that we are also going to see the ECB cutting rates rapidly because there are parts of Europe that are already in a recession, but they also have inflation. A lot of questions asked about central bank policy this coming year. It's going to be more of the same. So I think 115 to about 107 is your range.